there is an awakening, a renaissance. We are seeing a massive expansion into the mainstream. People who have never even thought of owning precious metals before, and now they're rushing to it.
Please join us for our next live stream, Sunday, December 5th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, December 5th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you're new to our channel or if you haven't already done so, please do subscribe, hit that bell to be notified of new updates, and give us a thumbs up. They do go a long way for us. Andy Schectman joins us today. Prior to starting Miles Franklin Limited back in 1989, Andy became a licensed financial planner specializing in Swiss franc investments and alternative investments. At Miles Franklin, a company that has eclipsed $5 billion in sales, Andy has developed an operation that maintains trust, collaboration, and ethical behavior, superior customer service, and satisfaction to better serve their clients. He's responsible for overseeing the firm's operations and business functions, including strategy, planning, account management, finance, and new business. And we're delighted to have Andy back with us once again today. It's time to saddle up and silver up for Andy Schectman. Andy, welcome back to SBTV. How are you doing?
Patrick, I got to say it's wonderful to see you, buddy. It's been too long. I'm doing good, thank you. How about yourself?
I'm doing okay. Hanging in there. You're right. It's been way too long, but glad to see a happy face there. Good to see a happy face.
Yeah, after the last 20 months to hang in, you got to have strong fingertips. So glad to see you're doing well.
Same. Glad to see you're doing well also. In fact, I'd like to start by asking you, how are things going at Miles Franklin?
Exhausting. They've never been better, Patrick, ever. In 31 years that we've owned this company, it's never been more exhilarating to be in this industry. Also never been more challenging. Securing product is a continual business. It's a continual job. We have 2 full-time employees that are working 24/7. We have 1 employee who deals with North America, works during North American business hours, and we have 1 employee who's probably just going to bed right about now. As it's evening for you in Singapore, it's 8 in the morning here in Florida, but he will be dealing with South Africa, with the United Kingdom, with Australia, with Austria. So we have literally 2 full-time employees working throughout 24 hours a day, basically securing product, dealing with importation, dealing with logistics, hedging. It's a full-time job now. So other than rising to a whole new myriad of challenges, it couldn't be better. And, you know, there's the old Chinese curse, may you live in interesting times. These are very interesting. It's been a challenge to rise to the challenge. But we're doing good, and I'm assuming things are well across the pond where you are in Singapore with Silver Bullion. I'm sure you guys are doing awesome as well.
Things are okay. A little bit different from 2020. 2021 is a little bit different compared to 2020. But I was meaning to ask you, how about for Miles Franklin as well? Is 2021 any different from 2020?
2020 was our biggest year by far. We've already eclipsed those numbers here through 2021. It's really even difficult to explain what it's like, Patrick. It's nonstop. It's 24/7 nonstop craziness. There is an awakening, a renaissance in people who have never even thought of owning precious metals before, and I think that there is a new interest amongst a whole group of people that is making what we do much more. I don't even know how to explain it other than to simply say that it's never really been like this before. In all the years that I've done this, we are seeing a massive expansion into the mainstream, something that I'm not used to seeing.
Yeah, is it the average Joe that's buying? Is it the wealthy that's buying? And what reasons are they giving for getting into silver and gold?
It's a lot of the I was asked to speak at a family office event recently. I've been dealing with hedge funds, dealing with a lot of financial advisors. I think there's just people waking up to the fact that asset prices have all reached ridiculous valuations, and the question being, are those valuations justified by the underlying economy? And I think there are a lot of people who are waking up to the realization or their belief that it's not. Look, I think that the environment that the Federal Reserve has painted us into is one where asset prices continue to rise and defy gravity and in some cases logic, many cases logic. And there is an understanding of that by people who never would have given that a second thought. And they're looking to preserve what they've made. It's 180 degrees different than anything I've ever seen, Patrick, ever, in the respect that these people never would have ever contemplated owning precious metals, and now it is they're rushing to it. People who have traditionally done well in equities are looking at their portfolio at all-time highs, measured against an economy that doesn't, in their mind's eye, support it. And so we are dealing with a whole new group of people that is changing the landscape of this industry pretty quickly.
Yeah, I hear you. A lot of the PE ratios are just off the charts right now, and we hear a lot of guys as well saying, there's a time to make money, there's a time to protect what you made, and we're seeing these guys starting to slide over into wealth protection. I imagine it's the same with you.
It's 100%. We have this K-shape environment where, due to the policy of the Fed, you have easy money and low interest rates, and all that easy money and low interest rates goes into blowing up equity markets and the bond market. And so you have people who are struggling, who don't own assets. They're finding their life is getting much more expensive, and you're finding the people who have assets are looking at their portfolio in amazement that their real estate and their stocks and their bonds have doubled, have tripled. And I think that doesn't resonate logically. Your mind, your eyes, and your gut are telling you that there's a disconnection here. And that's really where I think the heart of this awakening is in the realization that the valuations maybe just aren't quite justified to the economy underneath it. It is supposed to be a representation of the economy. George Gammon gave a good analogy, and I like it a lot. And the analogy was that if you envision a hot air balloon, the balloon is supposed to be the economy, and the basket underneath it is supposed to be the stock market. And as the balloon goes, so does the basket. But it seems as though it's inverted, whereby the economy is the basket and the stock market is the balloon. And where the stock market goes, it drags the economy along with it in a perverted sort of way. The bottom line is that I believe that people are waking up to the fact that they realize that this, in many respects, is a function of the policies that the Fed has embarked upon, and it is not sustainable long term. There's an old saying that it's easier to make money than it is to keep it, and I think that's what is playing into this expansion into what is a section or a swath of the public that we've never even knew existed.
Yeah, I completely agree. It's a great way to envision it, that upside down balloon. But I want to get back to metals a bit here. Shortages, delays, are things perhaps back to normal? I mean, how is the supply with silver and also with gold, and what are you hearing from the mints?
Well, the supply with gold has been much better than the supply with silver. When I look at the last 2 years, 95% of all of our sales, which are record, have silver in them or are exclusively silver. And as a result, gold has not been as difficult to come by. But we can look at the beginning of this year as an example, 2021. In January, the U.S. Mint started rationing and allocating gold eagles and gold buffaloes. And normally that happens in November, December, not 2 weeks into the new year. Gold is not immune to this supply chain issue. The U.S. Mint is the model of inefficiency. I'm one of 27 U.S. Mint authorized resellers, but all year long, there's been nothing but delays and shortages. And, in April, when they started to transition from type 1 to type 2 on the Eagles, they were shut down for more or less 4 months. Now, they didn't actually close the building and turn off the lights, but nothing came out for literally 4 months. And if you go back to March of 2020, when the Eagles literally exploded in premium, they really haven't come down in the better part of almost 2 years. And the question is this a new reality? Is this a new, what we can expect moving forward in terms of premiums? And as I mentioned, we now have 2 full-time employees that are doing nothing other than securing product and securing inventory, which used to be a phone call and bang, it's in your warehouse. Now it's 90 to 120 days in advance. You are purchasing, paying 100%, paying the premium, the highest premium we've ever paid in 30 years, not able to hedge that premium, and then running logistics for 90 to 120 days, hedging, tracking, staying on top of shipping, and watching it all the way through the system, and then deciding when it's okay to actually sell that product, knowing that we don't have it yet, telling the client we expect it in 2 weeks, but then oftentimes running into supply chain disruptions. And give you an example. We had about $8 million worth of product that landed in the United States in the Gulf Coast area in Texas, and had a Brinks truck pick up $8 million worth of product, and it was going to our vault in North Dakota. It had to go through Salt Lake City, where the 2 drivers quit because of the vaccine mandates, and left the truck inside the secured facility at Brinks, Salt Lake City, where it sat there for 6 days. And finally, 2 new drivers came in and drove it up to our vault in North Dakota. But trying to explain this to customers, why their product was 6, 7, 8 days delayed when we told them it was in the States and it was on its way, is not an easy discussion, but it's the new reality that we face. It's almost as if securing precious metals, Patrick, is running a logistics company. It's never been this way before. But I will say what's different is this. If you are not a big player, if you're not a company that has relationships, established relationships with the large mints, the large importers, the large primary distributors, you're shut out, because it goes like this. You have to place a very, very large order, because if you want to be at the top of the food chain before everything sells out 90 days in advance, you got to place a big order, call it 7 figures. You place a big order, you have to be able to hedge it. If you can't hedge it, you're dead, because if you try to buy something 90 days in advance without hedging it, you're dead. The market volatility will kill you. So you hedge it, you pay 90 days in advance, you pay huge premiums, what you can't hedge, and then you run logistics. Literally have an employee that is tracking this, staying on top of the distributors, staying on top of the mint, staying on top of the trucking, everything that needs to be done to bring it finally to the warehouse, where it then is opened, segregated, and sent out. We're up to the challenge, but I guess what I'm saying is that this will put smaller companies out of business. You'll see small coin shops throughout North America go out of business because they can't get product. And in an environment like this, buybacks represents such a minute part of anything that we do, crystallizing the old adage that there's no bull market like a precious metals bull market. And even though the price is not behaving the way a bull market may indicate, we all believe it will, but I would argue that the fundamentals are far more persuasive than the actual price, at least yet. And people are realizing that, they're flocking to get protection, and it's becoming more and more challenging to get product to be able to offer to them on a readily available basis. I've been saying for the last year and a half that this market will be defined by an inability to source product. I really do believe that. If it's this hard to get now, as we see a greater expansion, as a realization, a revelation that, oh my gosh, I need this, and these people are already way late into the game, when that expansion, let me just say that Rick Rule, someone who is a friend of mine who is as smart as any businessman I ever met, talks about a 0.5% allocation to the whole precious metals matrix in the United States. 0.5%. In 1980, that number was 8%. when the Dow Jones and gold crossed at 800, the last time we saw 1-to-1, the average over the last 40 years, if it's 8.5 or 8% in 1980 and 0.5% in 2021, the average, the mean of that 40-year scope is 2.5%, which would represent a 5-fold increase in demand in this industry. It'd blow everything up overnight. And so as we are getting closer and closer to that average, as we've talked about, an expansion into the mainstream, hedge funds, money managers, people looking just to exit with their profit. And where do you go if you exit with your profit? Not real estate. That's at all-time highs. Not the bond market like you used to. That's at all-time highs with interest rates at all-time lows. Where do you go? Well, precious metals represent the only semblance of valuation that there is. And it logically makes sense to where we're going. We can talk about what the Fed is doing, or I'd like to at least at some point, and with money creation and who they're appointing, and all of this stuff tells me that this isn't stopping anytime soon. In fact, it's probably only going to get worse. And I think people are waking up to that. And as we gradually move towards a greater percentage of interest in this industry, it will be defined by, I believe, an acute inability to source product rapidly or with any semblance of a fair value attached to the price that you pay for it.
Okay, so two things caught my attention there. Are we going to see premiums coming down anytime soon? I mean, just to have a little bit of relief, and how significant a role are buybacks going to play?
I don't think we see premium relief. I truly do not think we see premium relief. And I say that because it's getting harder and harder and harder to get this stuff, and you have to go further and further out. The U.S. Mint Silver Eagle. So, look, in November of 2019, had you asked me to buy Silver Eagles, I would have said, sure, $3.29 over the price of silver. I'll buy them back at $2.60 over the price of silver. And 4 months later, in March, had you sold them back to me, I would have paid you $11 over. Premiums really have never come down since then, a little bit. The lowest I've seen them for ask price on Silver Eagles are $8 over for the last almost 20 months. And I think it'll only get worse as we see more and more people decide to buy precious metals. Buybacks, no. I mean, look at there's something here in the States that we call junk silver. That's dimes, quarters, and half dollars minted prior to 1965. It's as rare as hen's teeth right now. Used to be the least expensive thing that you could buy, and now it's the most expensive thing with the exception of Silver Eagles. And this crystallizes your second question, and that is, will we see buybacks? And I say, hell no. In fact, junk silver, which hasn't been made since 1964, is impossible to get. No one is selling. Anyone who wanted to sell it sold it a long time ago. No one is selling to go back into the swamp, back into fiat currency. Instead, they're hanging on to it with both hands. And I think as it becomes more and more evident that you need to have an exit from the matrix, precious metals is it. No one wants to go back even at a profit. They don't sell unless they have to. So buybacks represent next to nothing in everything that we do. It used to, in 2017, it was 6 out of 10 sales that we were doing were people selling back, as there was a new optimism in cryptocurrency and equities that were going to the moon. It has completely flip-flopped, and now it represents less than 1 out of every 1,000 orders we do is someone selling. No one is selling. And I don't think you'll see people eager to go back into dollars, chasing really all-time high valuations in the 3 pillars of wealth in this country, stocks, bonds, and real estate, all at all-time highs, measured against all-time low interest rates. Incredibly dangerous when you talk about the potential or prospect of interest rates rising, which would literally kneecap the 3 pillars of wealth in this country.
Andy, with your customer base, what are some of the very real fears or concerns that your customers are telling you? Do they have fears politically, geopolitically, economically? And if people watching this have the same fears and concerns, what should they be doing?
Well, I think people are scared in general. Scared whether it be about the vaccine, taking it or not taking it, Scared about what's happening to the dollar. I mean, look, 50% of every dollar ever created in the history of the United States was done in the last 20 months. Scared about what's happening with the Federal Reserve. That it appears in my mind and in the bond traders' minds, it looks like a lady named Lael Brainerd is going to be the new Fed chairman, and she's a full modern monetary theorist, sweetheart of the progressive left. The nominee for the comptroller of the currency, Omarova, she is someone who wants to go to a digital currency, removing the commercial banking system, removing the FDIC. She is an advocate of letting the oil and gas industry blow up, small companies failing. She went out and publicly said that she hopes that the small companies, many of them, will fail over the short term, because if we want a green economy, this is what we need. But she also is publicly talking about enacting monetary policy directly from the Federal Reserve to a digital currency platform, to whereby if they need to spur inflation, they give money directly to the public, but more controversial, if they need to suck liquidity out of the system to slow down the inflationary forces, they will actually deduct money, credits as they call it, from people's wallets directly, a Fed wallet, a people's ledger, as she's calling it. This is insanity. These two people are full modern monetary theorists that are going to want to, if they find their way into office, and it looks like both of them might completely rewrite policy here. And I think people are waking up to that in this country. They're concerned, I think, that we're not going back to normal, that this is the beginning of a new normal. I think a lot of people, the biggest concern that I hear is, I don't want to leave my money in the banks. There is a growing mistrust of the banks. No one trusts the banks. And I think that is something that I hear every single day, over and over and over again.
Yeah, you brought up a great point with the woman who's the comptroller nominee from Biden. Omarova, yes. There were bills going through Congress where the Federal Reserve was supposed to create digital wallets for all of us. And then you have Omarova, who's talking about, let's do away with smaller banks. We'll go full on digital. I mean, these things are all unfolding. And like you said, people need to understand and be awake to what's really happening.
Yeah, and I've been talking about this since last March 2020. Nancy Pelosi came out and said viruses can live on currency. We need a digital dollar. And it became very obvious that they opened the box, let Pandora slide out, and then it just, little by little, you start to get more and more talk in this way. And I think that's exactly what she wants to do, is go full digital, go to the Federal Reserve. And the reason that they want this, the biggest reason that they want this is, the peripheral consequences or effects would be the loss of privacy, the ability to monitor what everyone's doing. But more importantly, I think what they want it for is because the commercial banks are not playing ball with the Federal Reserve's wishes. In other words, when the Federal Reserve buys bonds, that's called quantitative easing. They create money out of thin air and they buy the bonds from the banks. What that does is keep the wealth effect in play as they suppress interest rates, which raises the value of the bond market and all of the equities as a result, because fixed income doesn't work when interest rates are real negative. But what happens is when those banks get the money for the sale of those bonds, they have two things they can do with it. They can lend it out into the economy, which is how money is created in the United States. If it's not lent into existence, it dies. In other words, when they get that money, if they don't lend it, the only other option they have is to give it back to the Federal Reserve, where it's held in a reserve account in their name. But they cannot just keep it and spend it and give it out as bonuses or whatnot. They have to either lend it or give it back to the Fed. Now, that's what they're doing at 5 basis points. Instead of lending it out for a car loan at 5%, let's say 100 times the return. Instead, you're seeing over $1 trillion a night go into the reverse repo market, which is another way of saying that banks don't want to lend that money out. They're giving it to the Fed, earning next to nothing. And you're seeing banks like Wells Fargo and others close their lines of credit. They don't want to lend it out. In other words, the banks are scared what's coming, and the banks don't want to extend their balance sheet. They want to rein it in. The Fed doesn't like that. The Fed wants inflation and velocity, and if the money is not being lent out into the system, there's no velocity. So if you have the Fed be able to give money directly, to enact monetary policy directly to the people on their iPhone, whether it be inflation, here's money, or deflation, shrinking the money supply, give us some of it back. And Omarova actually, in her report says, or a paper that she wrote, yes, I know this is controversial, but if we want to be able to control monetary policy, it has to be a two-way street. They want to give money and take money. She wants to create what the heck is it? A national investment authority that gets to say who gets bailed out and who doesn't, who dies. And I guess the bottom line is that this is the antithesis, the opposite of free market capitalism. And I don't understand why the public here is not just up in arms, but this is why I think you're seeing some of the people who are a little bit closer to the information spigot, the hedge funds that I've been talking to, the money managers, and the very wealthy people who get it, they are, in my opinion, starting to react to this type of news.
Yeah, I hear you. I understand the banks, they put that money back with the Federal Reserve, the IOER. They get interest on excess reserves. They keep it there. It's less risk for them. And what you're saying with Amarova, the dangerous thing is once, let's say we go cashless and we have these digital central bank digital currencies, the Fed can absolutely throttle everyone, raising interest rates, lowering interest rates, and you have no control over your invisible digital currency at that point. You're going to have to spend when you don't want to. We're going to have to maybe save when you don't want to. We're going to be throttled back and forth.
Yeah, absolutely, and that's the new reality that we're facing. That is waking people up, and I think that we are heading down this path, and that's I think the thing people need to realize is that once you start to head down this path, unless there's just a complete and total washing of the whole system, I think we're heading down this path. It's becoming very, very evident and very, very obvious that this is where we are going. And the fact that there's no real pushback against this makes it very, very concerning to me. It just goes to show the dumbing down of this society where people are just not up in arms. They're not concerned about something that is going to completely reshape this country 180 degrees, and the media doesn't really talk about this. You have to dig deep. You have to listen to people like you and I, and if not, you don't hear it. And it's sad, but I think if you don't prepare, if you don't get out of the way of this, you're going to be swept away just like everyone else. As ultimately, I think the dollar is in big trouble. They are destroying it right in front of us. They are destroying the value of it. And if you go modern monetary theory where you just print your way to prosperity, you go down the same road that Zimbabwe did. It doesn't work. And that's really what they're trying to do, is just use the Federal Reserve to print our way through all of our problems. It doesn't work unless there's something standing behind it. And this is the whole premise of gold backing a currency, where governments will always choose the printing press over tough decisions like austerity. It just won't happen. So this is why you own precious metals, Patrick. It's not to get wealthy. Precious metals, to me, are wealth that have lived through 2 world wars and German hyperinflation and the Great Depression and every pandemic, and they'll live through this too. And this is why I think for the last several years you're seeing massive money accumulating gold, whether it be the central banks, the commercial banks, and now the hedge are the sovereign wealth funds and the family offices. There's one trader right now on COMEX, one, who's long 40,000 December gold contracts. Now, this is the same group of people, in my opinion, this group that the COMEX Commitment of Traders report titles the others. They're not the hedge fund speculators, and they're not the commercial banks. They're private managed money with anonymity. We believe them to be sovereign wealth funds or family offices. One trader has amassed 40,000 December contracts. They've been standing for delivery for the last year, and I believe this will also post for delivery in just a few weeks. That's 4 million ounces of gold. That's $7.5 billion in gold with an initial margin deposit of over $350 million. Who's got that kind of money? The biggest money in the world is standing for delivery. The biggest money in the world is accumulating gold when the rest of us are asleep at the switch. That's what's really different this time, is an awakening. You could talk about, what I believe is the biggest issue, and I think people will run to gold when this happens, and that is the announcement, I think it was September 1st or 2nd, the day after the United States left Afghanistan very unharmoniously, that Saudi Arabia has struck a military relationship with Russia. Now, it is our protection of the Saudi kingdom since 1974 that has given us the petro reserve status. And if all of a sudden Russia is now protecting Saudi Arabia and Nigeria with military cooperation, the two biggest OPEC producing countries in the world, what does that say for the future of the dollar hegemony, where oil is only sold globally in dollars because of our protection of the Saudi kingdom? And if you strip that away, what you see is a massive dumping of dollars, where the world who has to own dollars to buy oil starts to choose other things, maybe their own currency or a currency closer to home, or just a currency that's not the dollar. And all of a sudden, the best efforts of the Federal Reserve to monetize the debt market, keep interest rates low, goes out the window. You see interest rates spike. You see assets collapse, because all three pillars of wealth, stocks, bonds, and real estate, for the first time are not only all positively correlated to one another, inversely correlated to interest rates. And as interest rates rise, it is a religious experience, I think, for the wealth in this country, who would watch the valuations of their assets shrink quickly, evaporate. And I think this is part of the reason you're seeing, and I use the word sophisticated only as it pertains to information, and I think the sophisticated money is seeing this, and they are exiting stage left quietly in anticipation of this type of stuff playing out.
Yeah, I was just going to ask you about that. If you see the trend moving where family offices, these very wealthy, start moving into, let's say, the gold market, even the silver market, it wouldn't take them that long to really deplete the supply of metals, would it?
No, it could be overnight if they want. I mean, the metals market is the pimple on the elephant's ass, Patrick. I mean, that's the truth. There's so much money out there that's been created. I mean, the money supply has increased almost 30% year over year. But again, let me just say what I said, and let this sink in. 50% of every dollar ever created in the history of the world, of this country rather, United States, has been done so in under the last 2 years. So there's so much money out there that has found its way into equity prices and real estate prices. As Ludwig von Mises, the father of Austrian economics, would call it, the crack-up boom, where price distortion and misallocation of capital creates an environment where price discovery is next to impossible. And that's what's happened with all this easy money. It's just blown things up to levels that are not justified by the underlying economy. And that's really the issue. And all of that money, all of that wealth that has been created, will look for a refuge, will look for a safe place to go. And I think that's what's happening. And it's this K-shape where the people who don't have assets are struggling to make ends meet, as food and energy and housing. Oh, wait, those are the three things that aren't included in the government's measurement of inflation, the CPI. But those are the three most inflated asset classes. The things that we need to live every day are getting more and more and more and more expensive. But if you're wealthy and have assets, your assets have gone parabolic. You don't care. You're making so much money hand over fist. Yeah, you notice it, but it doesn't bother you as much. You're just trying to figure out how you can keep all of those profits, when most of the country is figuring out how they can keep food on the table, keep their lights on, and keep enough gasoline in their car to get to and from work. I think these are challenging times, and I really believe will only get more challenging, not only by the policies that seem to be quickly raining down upon us, but also we are very late in the stages, I think, of the dollar Keynesian economic experiment. And I think if you have all of your assets in dollars at this stage of the game, you are destined to go broke when this plays out. And I think that is what is spurring this widening into the mainstream. People who've never thought this way before are their eyes and their gut are conflicted. You know, geez, my statement is incredible, but God, it doesn't seem right. You know, maybe we should do something to protect. Maybe we shouldn't just try to ride this out into the sunset thinking that everything goes straight up and doesn't come back down. And I think there is beginning to be an awakening. These aren't the good times of the 90s where people are spending and partying and expanding. This is a different environment where people have made more money than they ever would have dreamed over the past 2 years, and it just doesn't seem right. And I think that's what's triggering it.
Yeah, it seems like what's happening in the 2020s, it's almost the same thing that happens back in the 1920s, 100 years ago.
Well, and what happened after the 1920s? You know, there was a generational crash. And whenever you see a massive expansion of credit, it is followed by a contraction. And that's just, everything has to breathe in and breathe out. We haven't breathed out in a long time.
Okay, Andy, with everything that you see from inflation to debt, the supply chain issues, the policies, the bugs circling the world, geopolitical tensions, everyone seemingly in Bubbleville to, of course, midterms coming up next year. What are you seeing in 2022, and what do you see going on with gold and silver in 2022?
If I had to guess, a lot of the things that we've been talking about start to play out in 2022. If we see Omarova nominated, if she somehow slides past the Senate, if we see Lael Brainerd get appointed, and I think we will see her get appointed because, excuse me, when the Fed announced the other day that they were going to taper, the bond market said no. The bond market cried BS, and the bonds rallied by 10% in 4 days. That's a massive move. That doesn't happen. If they expect taper, it should have moved the other way. And I say that to you because they saw her walking into the White House along with Powell, who is not going to be reaffirmed, in my opinion. So you're going full modern monetary theory, and if we see these two ladies get in and start enacting this type of policy, I think you're going to see fireworks in 2022. If I had to guess, we see gold and silver go markedly higher. I know Bank of America just came out and called for $3,000 gold in 2022. If you take a look at the ratio between gold and silver right now, the mining ratio, what's coming out of the ground, it's 7-to-1. 7-to-1. That's historically low. We have already demanded, we will see demanded for 2021 over 1 billion ounces of silver and a mine supply of 800 million. We're going to be a deficit in supply of silver. Of that 800 million ounces, only 30% comes from primary mining supply, about 240 million. We see a massive expansion into green and digital. You know, what's it called? General Motors just came out and said, I think by 2030 they will be 100% battery powered, get rid of the combustion engine. So you see this expansion into green. The need for silver is ridiculous. And so you are seeing, I think, between policy, between moving to a green and digital world, between the destruction of the currency, the policy of the government surrounding the viruses, I don't know, Patrick. I think we're living on borrowed time. And heading into 2022, I think if you don't have an exposure into gold and silver and look at it as wealth, not as an investment, if you haven't already built a core position, getting it is going to be much more challenging. But if we take that $3,000, just that conservative $3,000 price target of Bank of America, we divide by 7, which is what the actual gold to silver ratio, mining ratio is coming out of the ground. That puts silver at $428. Is that possible? Well, I don't know. You tell me. If it's coming out of the ground at a 7-to-1 ratio, but right now it's valued at roughly 75-to-1, I look at it as the most undervalued asset on the planet. And maybe this is why we are seeing so much demand, not only on the retail level, but look at what's coming off of COMEX. Last year, 300 million ounces taken off of COMEX. That's 10 years worth of deliveries. We're seeing something similar to that this year. And what about in gold? There's one trader, one of the largest concentrated long positions in the history of the COMEX, is long 4 million ounces of gold, and he'll probably stand for delivery in a few weeks. The biggest money in the world is front-running this. Look at Russia. Russia just announced that their gold holdings, for the first time ever, are in excess of their dollar reserves. They flip-flop, so they hold more gold than they do dollars. Look at China. Their numbers through Hong Kong are up 60% year over year. Those are the people buying gold and silver because their economy is on knife's edge with what's happening with the property developers defaulting on their bonds. You're seeing countries like Serbia at all-time highs in gold acquisition. And I've talked about at length the Bank of Turkey, the Bank of Austria, the Dutch National Bank, the Bank of Poland, the German Bundesbank. They've all repatriated their gold from the Fed and the Bank of England. They're copiously accumulating it. Gold was reclassified as a high liquid tier 1 reserve asset. If you see what's happening, the biggest money in the world for the past 4 years has been slowly, quietly accumulating gold and silver and de-dollarizing. And that's what the biggest money from the central banks like the Bank of Russia, who is basically saying, and he's a master chess player, Putin, he's saying there's a black swan event coming. Now, could it be the fact that they're protecting Saudi Arabia and Nigeria? And when I say protecting, let's just call it a joint military cooperation agreement, the way that it was written about in some of the media outlets. That's the biggest news that maybe ever, where the dollar has been given its hegemony status because of this protection. So now Russia steps in and says, we'll do it too, and then 2 days later announces that they have hypersonic ICBMs outfitted in all their naval fleet. Now, a hypersonic ICBM is what the State Department came out just the other day and said they're very concerned about because we don't have that technology yet. And these are missiles that circle the globe in a matter of hours and hit the ground at the speed of an asteroid. So not only are they protecting, but they have a military capability that we don't. So, you know, when you talk about the positioning and the front running of the sophisticated, smart, big money, I don't know. I think they're foreshadowing what is going to be an awakening to a whole lot of people in this world, where there starts to maybe be a shift in power and a shift in what is considered wealth. When you have a country that can just print the world reserve status into oblivion, when 1 trillion seconds ago was 31,688 years ago, and they throw around trillions and trillions and trillions of dollars that we don't have, we're already insolvent. We're already running high levels of inflation, and for that risk and for that dilution in the value of the currency, we're paying real negative interest rates. Everything is perverted, everything is upside down, and it can't last this way forever. And I think this is why you see the big money quietly front-running and moving away from what we see coming instead of embracing it. And I think you follow their lead and start to divest of dollars and protect what you've worked so hard to obtain, or what you've been fortunate enough to obtain thanks to the Fed, and take it off the table and put it in real wealth, like the central banks have been doing, like the commercial banks have been doing, like the sovereign wealth funds and family offices have been doing. They're front running because they're closer to the information spigot and they know what's coming.
Yeah, I'd have to agree. We're more or less seeing the same things in Asia. I think you hit it on the head when you said borrowed time. Andy Schectman, before we wrap up, how can people follow you and get themselves some silver and gold from you and enjoy the services at Miles Franklin?
You know, we're old school, Patrick. We still do things old school. Well, we're offline. We are building a new website. It's been a very slow, arduous process. We're not really even that close to having it finished, another couple of months. But in the meantime, we're analog in a digital world. MilesFranklin.com is our website. Our web store was closed 2 years ago. The proliferation of identity theft concerned me so much, I just felt owning precious metals is better analog in this digital world. And So you can give us a call. You can reach out to us at info@milesfranklin. You can check out our website. And just because we don't at this point offer online purchasing doesn't mean we are not completely capable of offering the best price in North America and getting people whatever it is that they're looking for. So, yeah, Patrick, it's always good to see you. I've always considered you one of the good guys, and it's certainly a pleasure to chat with you. We're all on the same team, and I watch you. I think people need to watch what you do. You offer a great service and great information, and I'm really honored to have been on here with you today.
Thanks, Andy. Appreciate it. You are absolutely one of the good guys as well, and I'm always honored to have a chance to speak with you. And I hope we can do this again soon, and let's hope for a better 2022.
Absolutely. I'd like that as well. All the best to you and your family, and everyone out there listening. Hope to chat with you again soon, and you stay well.
All right, stay well too. Thanks again, Andy. Appreciate it.
Thanks, Patrick.
That was Andy Schectman sharing his views, opinions, and insights on the economy and precious metals. Follow Andy and learn more about precious metals. Please visit his website at milesfranklin.com. Audio-only versions of this video can be found on iTunes and Spotify. And don't forget to subscribe, hit the bell for notifications for new posts, and give us a like and thumbs up if you like this video. These things go a long way in helping us to continue to do what we do for you.